because I want to discuss some other pockets with you as well. Castrol India is the stock that we're going to talk about. We have Rashmi Joshi, the Director of Finance at Castrol India, who joins in to talk about what was a very good set of numbers. Ms. Joshi, thanks for joining us. The volume growth that you all achieved this time was the highest that you've seen in the last 5 years at 9%. What led to this growth, and has demand picked up quite a bit?
Yeah, first of all, good morning and thank you for having Castrol on the show. And I'm really pleased with the set of numbers that we have reported. And as you said, for the first time after many quarters, we've seen a robust volume growth of 9% in the numbers. And it is underpinned by our strategy very much. As we continue to say that we focus on personal mobility, we have seen very strong double-digit growth in the volumes of personal mobility. We have also seen good growth in commercial vehicle oils volumes, which were hitherto flat or declining. So, and it could be a result of economic movement that is happening around us. So, industry is doing better. Commercial vehicle oils will be required more because I think vehicle sales are doing better. Having said this, I would always say that our volume driver has always been personal mobility and will remain personal mobility. We have seen very good growth in power brands, which have been again the pillars of our strategy, contributing more than 50% of our volumes, and we continue to focus on that growth as well to drive further volume growth.
But Rashmi, do you believe volume growth at 9% is sustainable in FY17?
So while I can't predict this with certainty, all I can say is that we will continue to do what we've been doing. That is focusing on the personal mobility sector, which will see a huge growth in future. On commercial vehicle side, we will continue to take actions. Some of them will be tactical, some of them will be strategic. We'll continue to introduce new products, and we will see how we can try to get good volume growth. That has been our strategy. However, because of the economic factors, you will always see that we were earlier not able to do well in the commercial vehicle oil segment. But now with the economy picking up, we are very, very optimistic about what we could do in terms of volumes. Well, I can't give exact numbers of how much volume growth we can sustain, whether it will be 9%, but I can certainly say that we can sustain the personal mobility side of the growth, and we will continue to work on getting more volumes in commercial vehicle oil side.
Okay. The other thing is that that the street likes is that your margins are one of the best in the industry. I mean, sitting at almost 30% margins now. Now that both your verticals are doing well, personal mobility and commercial vehicles, do you think that the margin trajectory could continue to improve?
So whether unit margins per liter may or may not improve, because we are the lowest point of crude oil probably in terms of cost of goods. However, I must say that as the portfolio improves, we focus a lot on product mix improvement, and the driver that is personal mobility leads to much better product portfolio in terms of what it offers to the consumers, and they're all high value added products, which means a different margin structure. So we are not looking at only crude prices to drive our margins, and EBITDA margin is also a function of how you control your costs, and I think Castrol has been doing extremely well keeping its costs below inflation all the time. So we continue to look at costs very carefully, and we will also continue to make sure that we have profitable volume growth, which has again been our strategy. So considering all those factors, we believe that we'll have very robust margins going forward. I cannot predict whether they'll be 30%, but if you have seen history of Castrol, even when the crude prices have gone up or down, we have been able to maintain a very good set of numbers in terms of EBITDA margins. Most of the times we have been almost double that of our peer set in terms of percentage to return on sales.
Rashmi, you spoke about cost optimization. Your realizations fell 2% this quarter due to the discounts prevalent in the market. Will the company be looking at, cutting down discounts and promotions?
So, as we've said earlier, we have a very robust and very sophisticated pricing model, or you can say where we look at market prices as one competition activity, as well as our strategic focus on different brands, and based on that we make market interventions, be it media or some discounts or whatever the need of the hour is at that point in time, and we have been doing it consistently and we will continue to do that. So whereas we can't say that we'll cut prices across the board. But if a particular brand in a particular market, based on our strategy, if we need to take actions, we will take action. And we've been doing that.
Okay, thanks for joining us and all the best for the future. That's the word coming in from Castrol India. Was a big wealth creator in the past, but since 2015 the stock has been slightly on a downward trajectory. Ajay, sorry to keep you waiting. We had to go across to the management of Castrol, but what are your thoughts on some of these stories in the auto space?